Good afternoon, everyone. Thanks for coming along. My name's Michael Whelan. I'm the General Manager of the M6 Toll Road. Been in the UK for 4 years and been in this industry for, hate to say it, but nearly 30 years now. So thank you.
Hi, good afternoon, and thanks for staying for the final session of the day. That's much appreciated. So I'm Lee Barfield. I'm an investment director at LPPI. LPPI is one of the 6 pension pooling vehicles in the UK that invests and manages UK local pension scheme monies. I focus on originating, executing and managing infrastructure investments for a vehicle called GLIL Infrastructure. So over the course of 10 years, GLIL has invested about £3 billion into UK infrastructure. So those investments are across digital, social infrastructure, renewables, and also transportation. So transportation-wise, we're invested in rail rolling stock, ports, and toll roads, being the M6 toll.
Good. So starting with you, Michael, because obviously you're the one with the asset that hopefully you're attracting money from. Why is it so important, or recently becoming so important, for private investment rather than it being a government-run project?
Yeah, look, I think there's 2 reasons. One is the public purse, or the drain on the public purse. For example, the M6 toll takes no funds from government at all. We only have one revenue source, and that is purely toll revenues.
Okay.
Right? And I think the other thing is that the private industry is actually very incentivised and, I guess, motivated to actually deliver. If the risk-reward balance is correct, then it should work.
Okay. And when you're putting together that risk-reward, are you thinking about return on investment only?
No. Return on investment is one thing. So just to give you maybe a little bit of context here, we have to project out, well, the M6 toll has a 50-year concession, there's about 28 left to go. So we have to project out many years in advance. The key is about making sure that what we've actually achieved previously, so prior projections, are actually being realised, which gives you an indication of future growth. Financial people will never say past is the future,
yeah.
But it's about making sure it's realistic and achievable.
And from a private investment perspective, is that important, next 50 years, or are you only looking at the next 5 or 10?
No, absolutely. It's a long-term view that we take. So for us, when we're looking at investment, we're thinking about 20, 30, 40 years plus.
Right.
That's our investment hypothesis. It's what we're doing, and it reflects the fact that the money that we're managing is pension monies. So
right.
There is a long-term investment horizon that exists with
Yep.
that. So for us, this also goes into how we think about investment within those investments themselves, within the portfolio companies. So I think when you've got someone with a long-term view, it means you can take those longer-term investment decisions where perhaps there is a longer payback period that's required. But actually, it's the right thing to do overall, both in terms of the economics of the investment, but also just ensuring that you maintain that social license to operate. You're delivering, good value for your customers. Your employees have got the right working conditions to be in. You're doing your bit towards decarbonisation. These are all long-term views that you have to take.
And if I go slightly off piece based on conversations that have been taking place on this stage earlier, you've got something like the Northern Powerhouse Rail, you've got HS2 discussions, all of which are going to affect traffic going, whether it's traffic, people, freight, whatever it is, going north, west, south, east. Are you part of that planning? Is that part of your long-term decision, or is that something that Michael has to explain to you? How does that work? Is that... Because it seems that everything's changing so quickly.
So let's talk more on a day-to-day basis.
Yeah.
So that'd be something that our forecasting team will take into account. So right now, HS2 is actually building over the top of the M6 toll road.
Right.
So we need to take that into account. That's more of a short-term issue. But longer term, yes, we do need to look out 10, 20, 28 more years to see what that impact will be. I think rail and road, I think they're quite separate in some ways in terms of people needing to get from A to B, that a road will always be a key option for a lot of people. But rail is also a good option. I appreciate that as well.
Okay.
But I don't think, yeah.
And in terms of paying for it as well, I mean, I'm assuming it's not, here's a check, thanks very much, we'll build it. How does that work? Do you have, because obviously there's the initial cost of build and then there's the maintenance and so on and so forth. Is that something that's shared with the investment? Is the investment coming in lumps or is it a big lump? How does that work?
Do you want me to do that one?
I'm
Okay.
happy to pick up. I mean, if we're talking about the M6 toll
Yeah,
itself,
just specifically, yeah.
Obviously, the business has been operational for 20
Yeah.
years now, so that
But you were in right from the beginning, correct?
We only came into the toll road a few years ago.
Oh, right, okay, so that's
not from the
misinterpretation,
beginning.
sorry.
But again, the fact that there is another 30 years to go on the concession still makes it a long-term investment. So for us, it's a case of it's built and operational, but we continue to provide capital where it makes sense to do so. So we've undertaken a relatively big investment in our tolling infrastructure in the last few years to
Okay.
make it future-proof for the next 20, 30 years. So money still continues to come for the right things, but generally speaking, it's an asset that is able to support itself.
And then from your organisation, is it siloed by the type of project that it is, or regional? How would you look at it? Would you say I look after road projects and assess those in their, how rich they are in terms of payback, or is it a regional approach? I'm just interested as to how you make your decisions.
So we invest across a range of different sectors. So
Okay.
renewables.
Yeah, as a company, I just wondered if you're set up individually to do it.
No, so I myself, I work across a range of different
Okay.
sectors, so in
Yeah.
digital as well. So for us, the focus is always around that kind of risk-reward ratio as to what makes sense at that point in time, but also what we try to do is build a portfolio that's diversified. So what you'll find is with transportation infrastructure, for example, usually there's a more closer link to GDP.
Yeah.
Whereas with renewables, you have more volatility when it comes to power price exposure. So building a diversified stream of infrastructure assets works well for us, and transport plays an important part because it has a different driver, a different linkage to some of those other areas.
And when you say diversity there, do you mean diversity of different types of projects or risk?
Diversity in different sectors and in risk. So, for
Okay.
example, we will invest in some projects where we are involved in the construction and development stage, which has a different risk profile to a mature operational asset.
Okay, interesting. And from your perspective, making yourself attractive versus, should we say the more practical day-to-day of running, how do you get that balance right? Have you got a marketing team per se, or is it everybody working towards the same goal?
Well, look, I believe we have everyone working towards the same goal. I think it comes back to a point that Lee raised, which is around social licence to operate. And that licence to operate is critical for investment like Lee, and other, pension fund investors. And that, you mentioned before about the returns. Sure, the returns need to be there, but it's also about ESG, making sure that we're contributing back to the economy.
Yeah.
In ESG terms. But the other key thing here is about the customer focus, and that's the key bit, I think, that differentiates, organisations and businesses like the M6 Toll, is that we are extremely customer focused. So having that run rate of being able to deliver with the ESG social licence to operate actually provides, I think, a good investment. So that's how we would look at it.
Okay.
And when we look at the customer, for example, which is absolutely critical, it's one of the first things we think about in all of our business decisions, is what will the customer think.
Okay.
So it's super important.
And then from a wider perspective, from your perspective, Lee, in terms of what is it that large projects like this, because obviously this one's working and it seems to be working, but if you're talking to other infrastructure projects, what is it they need absolutely to get right to make you interested in investing?
Yeah, I would say that firstly it needs to be a well-defined project where you've got support from government and local authorities there. I mean, that's pretty critical for
And
new
you
projects.
mentioned their government as well being an important
I
factor.
think so,
Okay, yeah.
Yeah, so that's a fairly critical one. there needs to be an appropriate level of risk that you're expecting people to take on. So I think there's an acknowledgement that you are taking on risk, and that's part of what you're there for. But it's making sure that it's the right level of risk for you. There are certain things that you can do around that, perhaps with your arrangements with the construction parties. Perhaps there's a way to put in place an EPC contract which gives you some protection around potential for cost overruns or delays on the project. And sometimes there's an ability actually to share that risk with the customer or with government. So it needs to have the right risk level that you can tolerate. For us, we sit there going, inflation linkage is quite attractive. The nature of pension money means that our obligations have some form of link to inflation there, so where you're able to ensure that your investment can increase with inflation, it is very useful. And the projects themselves need to be able to support external financing, because for us, we look at that and go, external debt can complement the equity that comes in from us. You know, at the end of the day, there's only a certain amount of equity that's available, and actually projects which are well designed and constructed in the right way can support for an appropriate level of debt to make sure that we're efficient with the capital structure.
And if sticking with to the time being, if you don't mind, but if there are developments that a project often isn't just like the toll and it's done, it usually adds to over a period of time. How can I put this subtly? Can you influence decisions?
For assets that we've invested in operationally, certainly so. I mean, we sit on the board of directors at the M6 toll alongside our co-shareholder IFM, so we're very much involved in those key strategic decisions, and for us also it's about the support that we can provide to the management team. Shareholders are there for more than just money actually. We can bring expertise, understanding that we have from other investments and resources that the company needs at certain points in time.
And from the other side of the fence, is that, oh God, here they come again, or?
Actually, no. Look, yes, there's a very clear line of sight between the investors and the operators, or the operations. But I think there's very clear alignment.
Yeah.
And that's critical. And, you know, Lee, you know, a few years ago got to kick the tyres, so to speak, and, you know, check out the management team, check out what we're doing. Thanks for, you know, investing in us, Lee. So
Obviously, it must have been a good meeting.
It must have been a very good meeting. But look, that's super important. You know, we need to, as an operator, we need to deliver, sure, the expectations of the shareholders, but also the expectations of society and also, or public, and also the expectations of the Department for Transport, who we hold the concession with. So it's a balance. That's where it's not just, you know, as you said before, is it just about the finances? No, it's not. It's more than that. It's very balanced.
I think it's worth flagging on that point again. You're not here to make a quick buck, because if you're investing over 20, 30 years, that doesn't work. So you really do have to look at it, that long term, what's important, right for customers, right for stakeholders, and everything else falls in line from that point forward.
Understood. I've hogged all the questions, so I'm going to make sure there are none from the floor. There are some. Guys.
Hello, Paul Campion, TRL. I've got hundreds of questions actually, but I'm going to ask you to speculate. Why is it that you're the only one? I mean, you're not quite the only one, but if you look at New York, the entire infrastructure was built based on bond issuing authorities, and M6 toll is quite unusual in the UK situation. Why? What's the Treasury got against you?
I think that's a great question, because I studied public-private partnerships actually a few years ago, and it was out of a university in Middlesex. And my understanding is that the home of PPP it all started from the UK. So I really don't understand why it hasn't evolved where it's evolved in the US, Europe, Australia, Canada, and Ireland, and so on. But I think it's a huge opportunity for the UK to try and find investable assets and invite investors, operators to the table and have that discussion to see what works. And it's come up a couple of times today that risk and reward balance is absolutely critical. If I can just add a little bit more, because it's similar, kind of like a question you asked before, is it actually working? And the M6 toll was set up as a bypass around Birmingham as a relief to Birmingham. We carry, or 50,000 people a day, customers choose to use the M6 toll. And I believe they choose to use it and pay a toll because what they're getting for it is the reliability. That's a key guarantee. It's stressless. There's not a lot of stress. And the other one is we don't have any potholes. We do get them, but we fix them.
Okay. There was another question, I believe. Oh, sorry. Yeah. One second. Off you go, sorry.
Yeah, sure. Ian Dodgson, Business Director from Arcadis. Probably a question more for Lee, this. I mean, the M6 tolls are a superb example because the source of revenue's crystal clear. You know, it's from the tolls. How much more difficult is it investing in infrastructure where there's existing government subsidy and the stakeholder map is more complex, like rail, for instance? And if you were writing an investor prospectus for a new railway between Manchester and Birmingham, for instance, what would be the key tenets of that prospectus to attract private investment?
Yeah, it's certainly a more challenging space, and our exposure to rail to date is really around providing the rolling stock, because for us, we sit there going, what can we get comfortable with? And that's those durable assets where you know that you can get comfortable with technology risk and who the off-taker is. So when it comes to actually more work that you do in rail, you do start to create more utilization risk that you're asking people to take on. And that's where it becomes more challenging. So what you can do there, I think, is how do you address that utilization risk point? And the way which you can deal with it through certain mechanisms is potentially through looking at providing some comfort around a minimum level of usage that someone would use on there, which at least provides you with a safety net should your forecasts be incorrect at the time of bidding for a concession or to run that route. So that's one area which you could help to do to approach that. And it can also help with supporting funding, like external debt financing as well, which also makes the projects kind of more attractive overall. So I do think it's about being able to address that utilization risk and the time horizon. Again, if you're providing a fleet of trains, that fleet will last 40, 50 years. You've got kind of comfort around that. With the rail, it would be a case of, well, look at where we've been over the last few years with 5-7 years, and you've had the changeover that's taken place with the TOCs there. Clearly, we've got a new model going forward, but the longer the period that you can give around providing that certainty, I think the more attractiveness it becomes.
Sorry, before we ask a question there, can I just add to that point? Obviously, some areas struggle to attract private investment less than others. Is that a good example? In other words, if you own the asset, it's very clear, it's very concise, easy tick. Not quite as straightforward as that, but easy tick. Is it the more complex, the more you're wary?
Yes, there's certainly some of that, but what it can actually come down to is the risk-reward trade-off here, that people will sit there going, I can see so many risks and I'm unable to get comfortable with that for the type of reward I'm looking for. Especially for us, we're a patient, long-term investor that's looking to invest in core infrastructure. So we're not looking for really high returns, but ultimately we're also not looking for really high risk. So what you can do is effectively marginalize those who might be interested by trying to put too much risk onto them.
Okay. Sorry, sir.
Steve Allen from CPCS. It's actually sort of related to the previous question. How do you see the prospects for investing in the rail sector under rail reform?
I think they're improved, I would say, but I do sit there going, we need to really understand it better. Again, I can get comfortable with rolling stock, but where we move to next, I have a little bit more uncertainty. As soon as you're taking on more operational risk as well, that increases the complexity. Having the right management team becomes really important there, but also the M6 toll has a 20-year operational track record. When we invested here, we'd be moving into something that's operating under a newer regime.
You mentioned the gentleman with the first question, and I think you might have another one. Did you? But you mentioned about there not being other tolls and systems. First of all, limiting ourselves just to the M6 toll. are there any plans to extend or add to it? I can't picture it in my head just from my basic knowledge of the UK landscape, but are there any plans?
Well, look, there's no plans, but it's something that we do look at
Yeah.
because, again, coming back to that customer focus point, if we can make it easier for people to get on, get through, get around, or whatever, mobility enhancements we can do, then we would have a look at it. Now, that's where, the investments come back into it, where it's like to go and build a new piece of road or a bridge or whatever costs a lot of money. So we have to go back to the investors and put together a case. So I think there's opportunities there. I see quite a lot of opportunities here in the UK for investments into road infrastructure that has been done elsewhere in the world that could easily work here in the UK.
Could you, for example, put a toll over Hammersmith Bridge, because that's right near me? I was wondering if you could charge for that.
If you drive on it enough.
I'll see if I can put a business case together.
Okay,
and see the invest. Sorry, sir.
So thank you. You mentioned at least a theoretical handback in 28 years. And clearly we can't speculate as to what actually happened in 28 years' time. But it triggered the question in my mind, to what extent do you feel any oversight from the DFT, who, at least in theory, have licensed this stuff to you? You mentioned you don't have potholes. Well, that's a decision you've taken as to where to set the maintenance boundary, presumably. Is there a negotiation between you and the DFT on that, or have they just sort of, bye, see you in 28 years?
Okay. No, it's not. We'll see you in 28 years. I can say that. So we've got standards that we need to adhere to, which are national highway standards, effectively. Right? So we do that. But yes, we do go above and beyond because people realise that they are paying. Right? Everyone's paying for a road, for every road that they drive on. But for us, it's a little bit different, right? So we expect to provide the customer with that benefit of zero potholes, for example, and plus other services.
So
Yeah,
the
that help?
concession agreement governs the condition that the road needs to be in as well. And I think for us, again, taking a longer term view, we're very hot on proactive maintenance because we recognise that actually longer term that makes a lot more sense, and that then supports there being consistently a good quality in the road. And when it comes back to the end of the concession and handing the asset over, we've got very clear asset lifecycle plan and the work that we're undertaking there to mean that the road will be in the right condition that it needs to be when it's handed back.
Sorry,
I'll just add one more. So in terms of day to day, we're not on the phone to the DFT day to day, right? But every week, every couple of weeks, there's definitely dialogue going on between the two teams. So, for example, there's one at the minute that's quite active because what we would like to do is remove the barriers that we have on the toll road and turn it into free flow tolling. What that means, for us to be able to do that, we need to get legislation that is similar, or exactly nothing more, nothing less than what Dartford have, Mersey have, right? So that's a dialogue that we're going through, not quite day to day, but pretty close to it at the moment. But there'll be other topics that we deal with like that, or ongoing.
I was going to finish with things that you would leave the audience, but I think we've covered those in terms of, from an investment perspective, in terms of managing your asset and how to make yourself attractive to it. But are there any last thoughts over and above that you'd like to share with the audience, or is that a natural way for us to end proceedings?
Look, I think from my perspective, public-private partnerships, they work. They're proven around the world. They could easily be adopted here and be another source of funds, if you like, for government for infrastructure within the UK.
Yeah, I would just add to that at the end of the day, there is a huge amount of interest in investing in infrastructure. Private capital stands ready to be involved in that. And I think for organisations like ourselves as well, you're sitting in a position where you can be having UK and pension monies investing into UK infrastructure, which is what I think everybody wants to see. But the key becomes just creating the right investment conditions for that. And to the partnership piece, it is a case of government, local authorities and private sector all working together and taking that long-term view.
Can I? Sorry, you shouldn't have said that because I've now got another question. You mentioned there UK to UK. Sounds nice on paper, but do we really care? I mean, surely if there's a better scheme in Germany, you would happily invest there, would you not?
That's correct. So as an asset manager, you've got a fiduciary obligation to invest in the best interest of your members, which is the reason why the UK has to make sure that it's an attractive place to invest, because we can go and invest elsewhere. But it's very clear when you look at the message from government that there's an eagerness to try and have more home investments. So what I say is that people are ready to do that, just create the conditions for it.
Brilliant. I think a perfect way to finish. But so, guys, can you just put your hands together for the last session, the graveyard session, and they've done brilliantly.